Have you ever been in a place where you weren't sure what that next step was that you were going to take, or you hated the life that you were in, or maybe you loved the life that you were in, but you wanted more for your life? Today's guest has experienced all of those things and has come out a million miles ahead. I'm super excited for you guys to hear his story. Don't go anywhere.
So the big question is this: how can we achieve financial freedom, quit the 9-to-5, and live a mighty life? That is the question, and this show will give you the answer. You are listening to The Mighty Mike Show with your host, Mighty Mike Reed.
What's up, you guys? Welcome to another episode. I'm here with my new friend, Nick. How you doing, Nick?
Doing fantastic. How are you doing, Mike?
Dude, I'm living the dream, man. We just got talking in the pre-show about the different places we've been and what we're doing and the market. And I'm just excited to get into your story. Why don't you take just a second, Nick? Tell us a little bit about you and your personal life.
Yeah, so about me, I'll leave work out of it. But, one of the things that really drives me and makes me feel young and excited is traveling the world. So travel the world with my buddies, travel with my girlfriend. And when I'm not working, that's pretty much what I'm doing. I'm doing that. And then I live in Colorado, so we do all the things that typical people in Colorado do. But,
A little snowboarding, skiing.
Yeah, skiing, camping. My girlfriend drags me out into the woods a little bit and sleep in a tent,
Hey, tent camping is better when you're not alone. That's for sure.
Yeah, exactly. So yeah, that's me. I mean, work, real estate, and love to travel.
That's cool, man. That's cool. Yeah. One thing I know is you can't really do super well in real estate or really in any business without having some personal life. That's why I always like to get to know people a little bit on a personal level. I'll tell you, snowboarding for me is a no-go. I'm a little top heavy. So when I go snowboarding, I end up becoming the avalanche going down the hill. Okay. So no snowboarding for me, but let's get into your story, because I think people who are listening, could really benefit from understanding the pivots that happen in life. I know for me, Nick, I had a pivot from being a forklift driver when I was young to then doing sales and learning that I could write my own paycheck, learning that, sales was the key. No matter what job I did, sales was it. And so why don't we start there? Like, what got you, we're going to get to real estate in a minute, guys, so hold on. But what got you started in sales?
Yeah, right out of college, one of my buddies worked at pharmaceutical company, inside sales at Mylan Pharmaceuticals back in Pittsburgh, PA. And, I graduated college. I was doing landscaping in summer, still living at Kent State, and reached out to him, and he hooked me up with an interview. A couple weeks later, I ended up getting the job, and that began my career in sales. It was an inside sales position, temporary position, $13 an hour. Nothing crazy, but it gave me an opportunity to study and educate myself on the products that could get me into outside sales.
So that's. Now, did you meet people? Did you make contacts with people that you still like that helped you move forward?
I did. I networked. One of the things I did was really connecting and networking myself, putting myself out there and just in uncomfortable situations. I was like 22 at the time, and I was chatting it up and networking with people in their 30s and 40s and 50s who were outside sales reps or district managers, and connecting with them and just kind of letting my goals be known. Ultimately led to some of those opportunities to eventually get promoted into outside sales.
That's crazy. Yeah. Having the opportunities to get out there when you're first getting started, because you don't know what you don't know, and then you start learning and you start meeting people. And then that's actually how we learn. At the end of the day, we're sheeple, we don't want to be, nobody wants to be. But that's really how it works, is we know someone who brings us up. But then now what do you do with it, right? So you get this information, you now have this opportunity, and then what do you do with it? So how many sales jobs did you have before you got into? Because there's some numbers here, 500 million in annual contract sales.
Yeah, so that was more of an account management position. I had a 9-state territory, but I was in pharmaceutical sales. I left pharmaceutical sales to take advantage of an opportunity that kind of allowed me to have that lifestyle of traveling. So I had a 9-state territory, and learn a whole other aspect of the healthcare system when it comes to
Mm,
like how pharmacies get reimbursed by insurance companies.
mm.
Ultimately, that drives the entire healthcare system in some aspect. And so I learned that aspect of the whole system. So I kind of got out of sales a little bit, more on the national account management. And
Right.
then from there, I did take another sales job where I led a sales team at a startup company. Uh,
Yeah.
Back into pharma, and now where I'm at now, which is in sales, but in some other aspect.
Yeah, so let's dive into that. So real estate. So you get into doing some flips or wholesale, or like talk, walk us through that. What was like that first experience in real estate?
Yeah, I was 26, and I think the best thing that any 20-some-year-old can do to get started in real estate is house hacking. And in Denver's a very expensive market. It's hard, if you wanted to put 20% down on a property, you got to come to the table with 200K minimum, right?
Mm,
And it's very hard to do for like a millennial or somebody in their 20s and 30s to do that. So
yeah.
if you can house hack and get 5% down, and at the time, this was before the market really took off, and there was 20% plus appreciation rates in Denver. So I bought in 2019 when I was 26, lived in one room, rented out the other two, and completely cut my living expenses. And actually, I completely eliminated my rental expense. So I went from 2,000 a month to not paying anything.
You said that was a duplex?
No, it was just a 3-bed, 2.5-bath, single family home. So I had roommates right down the hallway. Yeah.
You know what? I love that, man. Anytime you can get out there when you're young, you don't have kids, and
Mm.
you want to actually, that's it's just such a genius thing. Like my son's in the army, and he can get the VA loan, which is no money down,
Yeah.
right? And I'm like,
It's-
you should be buying a house now, and I'll even help you make the mortgage payment, and then after a year we can rent it out.
Yeah. You sacrifice a little bit of, being uncomfortable and living with people you don't know. If you're in a good situation, maybe you could get friends to live with you. But I moved out here not really knowing anybody, so it was two random people, and it was an uncomfortable experience for 2 years or so. But I was able to increase my income by about 50%. I eliminated my housing expense entirely, and that allowed me to eventually go buy another house hack. And so that's how I started my career investing in
Mm.
real estate.
So were you like, did you have to I'm just curious, did you have to, like, as you're going down the hall, be like, hey, rent's due tomorrow?
Yeah,
Like
in a
you
way.
have it?
Yeah,
Yeah.
yeah, in a way, yeah. Yeah, it was interesting. I had good tenants, I had good roommates. So fortunately, I didn't have to, you know, remind them, 100 times to pay rent.
Mhm.
I think it was also because I lived there. Once I moved out, I ran into some of those situations.
Mm.
Um,
And then were you still renting it, like, to different people or just one family, or?
Different people. So, and I'm
Mhm.
actually selling this rental this year in about a month. But
Okay.
I rented it by the bedroom. So I had 3 different leases in one house, but it allowed me to cash flow, probably over $1,000 a month.
Yeah.
Otherwise it would have been much less.
That's an experience, because a lot of investors who buy houses and flip them and then they turn around and rent them out, right? They do a refinance and then they turn around and rent them out. They're worried about that because, like, the complexity of having multiple different people in there. Oh, we paid rent, or I loaned her money, she didn't pay me. So you actually have some experience, pad splits, and there's different ways to go about it. So that's an interesting experience you had.
Yeah, it was like landlord, part-time therapist,
Mhm.
matchmaker, so I was having to do like all these different things. Um,
Yeah.
I wish I could have passed it off to a property manager, but as you probably know, nobody really manages a rent by the room type of rental. And that's a common strategy here in Denver, to kind of help with that lack of cash flow that you otherwise would have.
Yeah, in college communities, it's very common, right? You get like the dorm rooms and stuff like that. But then right outside of that, like I went to college at Chico University in Chico State in California, and it was a big party school, and they had all of the sororities and and fraternities and whatnot, and they did that. And I knew a lot of investors who owned those deals. And to them, it was like, oh, it's going to be trash. The season's over. Everyone's getting out of class. They're going back home. They would come in and just redo everything, basically like like a dog kennel. They'd come and put, concrete floors or laminate floors, and cheap everything because they knew it's just going to get trashed again.
I lived in a frat house, so knowing that, I can't imagine being the landlord in a situation like that. And, that's what happened. There were like 6 of us. It was a small frat house, but that's what it was. We were all paying rent by each room, and they probably made great money, but it was a college house in the day.
Yeah. So okay. So that was your first deal. You got involved in real estate, and you're like, okay, this is a way to make cash flow. This is, or at least you didn't have any rent, while you were going there and living there. So what was that next real estate investment? Because that really, the next one is where it's like, hey, did you go in house hack again?
I went and house hacked again. I bought a brand new house. I reserved it, and it was actually pretty fortunate. It's about a half-mile south of an area that I really love in Denver. I just got it at a perfect time at a good price. It's another 3-3, or actually it's a 3-4, sorry, south of Sloan's Lake area in Denver, which has become just, it's grown so much. And there's it's kind of in that path of progress outside of Denver a little bit. At the time though, I brought one of my roommates from the previous house. And then I also had my girlfriend move in with me, and she's about 3 or 4 years. She's 4 years older than me. So as you could probably imagine, the whole roommate thing is not something she wanted to take in. So he lived here. Yeah, he lived here with us for a year and then moved out. And we were interviewing some potential roommates, random roommates, and we just decided we're not going to do it anymore. So I was going to have to find other avenues of investing in real estate.
Yeah.
Yeah.
Wow. Well, that's kind of cool though. I mean, that's really cool actually. Okay. House hack. And that's where you're at now. And what'd you do? You got it started getting into capital raising, right? Was that the next thing?
Yeah. So, I actually, while I was still in pharmaceutical sales, I had an opportunity to join another company with my boss who's now my closest friend and one of my business partners now. He had an opening for Denver South. So I took that position. And I was in pharmaceutical sales for 11 months. The economy started to take a turn, and I got laid off. So I was kind of trying to figure out what's next, and that's what led me into where I'm at now, which kind of really shifted my whole investment strategy as well since I joined this private equity company.
Yeah. Now you're going into this right now, and I see that you guys have done really well with raising private equity. It looks like 50 million across all the different funds. I'm just curious about how that started. So like, cause I know I've been raising funds here for a little while, and I know when I first got started, I felt like I was selling Cutco knives again.
Sometimes it feels like
What's that?
Sometimes it still feels like that.
Yeah.
Yeah, the company started in July 2015. The founder CEO of the company, Lon Welsh, who's my mentor, he's just very well known in Colorado. He sold a title company to Compass Real Estate, and then he sold his private equity. He sold the largest brokerage in Colorado to a private equity company. And just through his experience in the last 25 years of investing in commercial and residential real estate, he's really just built up a following, and people know who he is. Alongside him, there was a partner at the time that ran a lot of the marketing, and he does a lot of content generation. He runs the Denver Investment Real Estate podcast. And so those two joined forces. And really, I think as you can find here, and as we both were talking earlier on, content generation, webinars, et cetera, can really be a driver of capital raising. I think that's the theme of what we do at Ironton Capital. We're really educating investors a lot on, for example, investing strategies with a self-directed IRA, optimizing their portfolio, selling off properties to potentially invest in Ironton Capital. And so we really lead with education. And just a lot of the education that we've done, I think, is very relatable to a lot of the investors that have ultimately invested with us. And I really think that's been our strategy for the last year or so. Is obviously the success, I think, speaks a lot for itself, and that leads to a lot of referrals. But we've done a lot of just education that a lot of our investors can relate to. We've showed them other ways to invest in real estate, such as through our private equity funds.
That's really cool. So you guys do like the webinar, hey, learn what it is to invest in this, and probably run ads and stuff like that.
Yeah, every month we do a real estate trends webinar. We usually get about 200 people that attend that. On top of that, we'll do
That's pretty good.
yeah, it's great. We get a lot of agents on the call. We get a lot of investors on the call that and nobody's really compiling all that information in a 1 hour webinar. And so that's another value point that we offer to them. We're not selling anything. We did another webinar where it's like, hey, where can you park your cash during inflation? We have an income fund, and we kind of can compare the income fund to some of those other opportunities out there, especially in this high interest rate environment. Investing strategies with a self-directed IRA is another one that we routinely do. There's a lot of investors out there, especially folks that, as you know, nobody really stays at one company anymore. So there's a lot of old 401ks that just continue to compile. So why not roll that capital into a self-directed IRA and invest with that? And so showing them those strategies and various tax strategies that are associated with that can benefit them in the long run. That's another webinar that we've done. And then, like we were talking earlier, Denver has had such an appreciating market. It's growing tremendously. A lot of our investors bought properties in 07, 08, 09. And they want to optimize their portfolio because they're seeing that now they've got paid off properties and the returns aren't that great anymore, but they're getting good cash flow. And so we'll do a webinar around like, how can you optimize your portfolio? How can you maybe consider the strategy of maybe selling a property, investing in our depreciation shares? What could that mean to your tax situation? So just combining all those things has helped us raise so much capital so far.
That's powerful. And so I'm curious about the fund. Are these accredited investors, or do you have other options as well?
All accredited investors.
All accredited investors. So just so you guys know, you SEC people out there, these are for accredited investors only. I don't need no emails or I used to be Nick. I used to be a process server. It was one of my first jobs that really helped me take off financially, but it was a hustle, but there was a lot of people like that where you'd be serving just, serving somebody because they needed to be notified of something that was going on. And so that's cool. So about the fund. So let's talk a little bit about the accreditation and what's your process for like bringing them in, like, let's say I know I'm an accredited investor and I want to invest in your fund. Like, how do I do that?
Yeah. So like, just how do you invest in the fund, just in very general terms? Is that your question?
Yeah. Do I get like a portal? How do I send you $100,000? You know what I mean?
Yeah, typically. Well, so if you've already committed, you said, hey, Nick, I want to invest in your fund. There's a very easy process. We send them a link to reserve their spot in the fund where they'll indicate their investment amount and then the entity that they're investing with. So whether that's themselves or say a self-directed IRA or a trust. And then from there, they have to go through an accreditation process. We offer a free third-party service, or most of our investors already have a CPA letter that verifies their accreditation.
Right.
So they send that to us, and we have that on file. And then it goes on to, they got to review and sign the various legal documents and then wire their funds. And then from that point, it's a purely passive experience as a limited partner.
Now, do you guys pay out? And I know a lot of this already. I just want to ask because I'm curious, and I know people, especially agents and some of the wholesalers that are just getting started, may not know. It's like, do you pay dividends on this stuff? Like, if I give you $100,000, what could I expect? I know you can't give exact numbers because every deal is different, right? But like, what could I expect in dividend payments and how often?
Yeah, so I generally give investors the expectation that they're going to earn a preferred return in those first 2 years, but they're likely not going to see any distributions. And there's two reasons why. Half the fund is usually new development. So as you know, there's no income. So whether it's residential townhome development or luxury class A or build to rent communities, that's about half the fund. And then the other half is heavy value add. So we're taking these highly distressed assets and making them better and selling them at a higher price. Yep. There's usually not a lot of income to be shown throughout that value add process either. So all that capital, our partners they're usually taking that capital and trying to finish the project as quickly as they can, so they can
Yeah.
refinance. At which point you'll start to see your capital coming back to you, likely your initial 100K. If it's a good time in the market, in say 2 to 3 years, and we can sell it, the interest rates have come down, then we'll sell it and then distribute the capital back to our investors. So for the most part, a lot of the distributions from our fund are capital gains. It's not going to be ordinary income.
Mm.
The only time it will be is if the economy does not permit us to sell the properties, but we can refinance. Then we'll just hold the asset as a stabilized asset and distribute quarterly dividends to our investors.
Mm. Yeah, that's a really good breakdown, because you never know when you first get started. Most funds, in my experience, will take a full year before they start paying out on anything, depending on the deal. And that's the cool thing about multifamily, right? Is like you can look at one deal, like we had a Georgia asset we just closed on. Was it day before yesterday? 260 units, something like that. College Class A asset in Georgia, and that is 2.5 times return. After 5 years. So for a lot of people, that's like a slam dunk. I can't imagine it much better than that. But for some other people, they're like, Mike, I could invest that in a business and make 100 times that in 5 whole years. So it just depends on, do you want passive income or active income and things like that.
Exactly. We also offer a debt fund. So we offer an opportunity for investors to say, if you want that growth, you could diversify your investment into the National Diversified Fund. If you wanted that supplemental income, we have the debt fund that you can invest in as well. So we really take the time to sit down with investors and strategize an investment scenario that aligns with their goals and what they're looking for over the next 5 years or so.
That's really cool. Now, what about somebody who's coming this is a question I get so much, so I know you probably have heard it too, is the 1031. I'm getting ready to get a bunch of cash, 1031. I'm already set up with it. I want to give you some money. How do I do it? Is this something you get?
I love this question. Yeah. Unfortunately, you can't do that in a fund. Our National Diversified Fund is invested in 10 other investments. So there's not a direct ownership in the property. My understanding, as you may probably have experienced in your experience, is there's a way to do it if you're investing in a syndication directly in that property. And I know people that do it, but I think one unique benefit that I don't think a lot of other funds offer is we have 2 classes of shares. So we have a Class A and a Class B share. So Class A shares, they can get a higher pref, but they'll get no depreciation allotment from the fund. So these are your self-directed IRA people, or anybody that is not in a tax situation where they can benefit from depreciation. That leaves the Class B shares with anybody that can benefit from depreciation will go into that class. So in our last fund, we had a 75-25% split respectively. So we could pass on depreciation to investors in Class B. And I think in that fund, we had up to about 70% of the check amount was allocated for depreciation for each investor. So while you can't 1031, we have had investors that have sold a property, reinvested the profits into our fund, and they're using the depreciation from that fund to offset their capital gains liability. So it's a really unique opportunity for investors who don't want a 1031, but they want to offset as much as they can and then put that capital into an investment that could get them 17 to 20% per year.
I love it. Yeah, exactly what I was thinking. And yeah, there are ways to do it and maintain ownership with the 1031, but traditional funds like investment funds don't allow you to do that. Yeah. And so I appreciate you clarify. You clarified that very well.
Thank you. Yeah. And one thing I did forget to mention, of course, is it's the SEC that really makes those laws. So if anybody thought that it was just unique to our fund, it's not the case.
You guys are rude.
Yeah, I know. Maybe they'll change that. I don't know.
Yeah.
They keep saying the 10 going away, but I don't think that'll happen.
Yeah, we got to play by their rules, right?
Yeah, exactly.
Yeah.
Exactly.
So I want to talk a little bit about the investors that you're reaching out to, that you're getting, because I think seeing it from the eyes of what you're doing, what you're trying to help them do, is very helpful for the potential investor.
Yeah.
Because when I reach out to people, I feel like sometimes like I'm selling them knives, right?
Yeah.
But when you actually purchase an asset and you see it go full cycle, 5 years, whatever it is that you're going to do, you see the returns they get. They put in 100 grand, they get dividend checks, and they get 250 grand back after 5. This is just a rough numbers. These are not exact numbers or promises, right?
Yeah.
But you could change someone's life with that. You could essentially set them up for retirement after 3 or 4 of those cycles. So do you feel like this, getting to my question, okay, if you're calling, let's just say you get like 100, what would you say your numbers of commitments to actually funds happen?
Can you reword that question?
Yeah, it was kind of terrible. So for all the people who you talk to who actually decide to invest,
Yeah.
how many actually come through? I mean, my numbers are pretty low. I'll share with you after you tell me. But if 100 people tell you, yeah, I'm going to invest, Mike, let me know when the deal closes or when we get closer and I'll send you the funds, blah, blah, blah. How many of yours actually are closing, you think?
I think we've got about a 70% plus close rate on those soft commits. And I think a lot of that reason too is I don't put them, like when I look at our pipeline, they don't go in that soft commit unless I've gotten verification probably like 2 or 3 times that they're going to be investing,
Oh, that's
So
good.
really,
Yeah.
I want to really be sure. And I also don't want to give myself any false hope on our numbers going forward. Right. So, I usually don't get investors, usually the ones that say yes, like I'm planning on investing, you know, I feel very confident that they're going to be in onboarding and in funds received.
Mhm.
Sometimes there's a process where if they're setting up a self-directed IRA or they're waiting for the capital, from a sale of a property, for example, you're kind of just waiting on their timeline in that aspect. And
Yeah.
sometimes those don't always pan out just because of the timeline of when our fund closes and when they can finish those items.
Yeah, that's true.
Yeah.
That is true. Yeah. Sometimes they don't, you're just waiting, I'm waiting on the money. I'll let you know when I get it.
I know.
Well, you might have to wait for the next asset because
Yeah,
we're going to close.
I know. Exactly.
Yeah.
Exactly.
So how about when you're actually calling? One of the things I love to do, have you ever read the book, Never Split the Difference? Have you ever heard of
I
that?
haven't, it's been on my list, but you just
Man,
recommended it, so I'm going to read it now.
I'm gonna give you a line. I'm gonna give you a line that is going to. It's just my favorite line, and I got it directly from him on a podcast for real estate professionals. And Tom, what's his name? Tim Ferriss. What is his name?
Tim Ferriss?
Anyway, no, it wasn't Tim Ferriss. I love Tim Ferriss too, but no, it was shoot. Anyway, I'll think of it in a second. But he was on his podcast and he was telling him, what do you do when someone doesn't reply to you?
Yeah.
You had a great relationship, you were talking to them, it seemed to be perfect, and now they're just not replying. He has this thing, and this, he says it so much better. You can look it up, Google it. But he says, "Have you given up on working with me?"
I like that. I like that a lot.
Simple. It's
Yeah.
just simple. And I'm telling you, I've used it and it's worked every single time.
Yeah.
They reply. Yeah, they replied, "No, Mike, I'm just, it's busy right now." And because they are the ones who are giving up, not you.
Mhm.
And then it's a commitment, right? It's like and that's one of the things I was going to ask you is the disqualifying questions. Like when you're talking to someone and you, instead of trying to tell them, "Oh, this fund is great," and all these great things about the fund, like just have a few questions like, why don't you invest your money in real estate? Or like on your own, why aren't you flipping houses? Or why aren't you using some of this money to invest in the stock market? And they're like, I want to invest with you. Be like, I know, but why not do these other things? I'm curious.
Yeah.
Now they have true motivation.
Exactly. Yeah.
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 Yeah. Real estate sales, we call it disqualifying, where you disqualify them because it brings down their guard, and then they want to tell you exactly all the things the reasons why they want to work with you. And I like that because now we're having a real conversation about how I can help them versus all of these scripts they put up because people are trying to sell them. If that makes sense.
Yeah. Well, I always just love to really understand like their investment strategy, which is along like exactly what you were talking about, to see if like, are you a good fit for us? Are we a good fit for you as an investor? There's a lot of investors that can't give up the control that they want with their investments, right? If somebody owns a single family property, they like the control that they have with it. And if that's like your priority, I want to understand that and know that like we're probably not a good fit for you because this is a 3 to 5 year fund and you are not in control, right? So I really like to understand, what is your investment strategy? Are you looking for something more passive? What are you currently doing? Tell me about your current portfolio. Really just kind of opening up the dialogue to try and form a foundation for a relationship that I can have with that person, many years onward.
Yeah.
It's, as much as I love to, get that, it's a long game mindset, and it's kind of one thing I find that's challenging is, you have a fund that's going to close in maybe 5 to 6 months, but I'm trying to play that long game of just trying to form that relationship with an investor, because they might not be an investor with us now, but they might be an $1 million investor with us in 5 years. And I don't want to give up in that process, but it's an interesting balance, as I'm sure you could find, or maybe you have challenges with. How do I balance that mindset with this tight deadline of having to close a fund and raise, say, $15 million, in 5 months?
Right.
Yeah.
Yeah. And it's staying in touch with them too. That's one thing I've noticed just as a marketer. Like I know we have a 6-month timeline before closing, and a lot can happen in that time in someone's life, and staying in touch with them, like, hey, just so we're still closing in 5 months and 4 months and 3 months and 2 months,
Yeah.
Yeah.
You get to that 2-month mark and that urgency starts, I think, kind of develop. You can create that urgency a little bit better. But I often find, when we're in months maybe 2, 3, and 4 on a 6 or 7 month fund, it's a little bit stagnant, so you're really trying to do a lot of outreach and prospecting in that time frame. And then when I get to like months 5, 6, late month 5, 6, and 7, it's like the opportunities come out of nowhere, because of the urgency. So it's an interesting process I'm trying to continue to get myself more and more familiar with.
Yeah. That's good stuff. Well, we've kind of dove into all the things that you're doing. So, but I'm just curious, what are you working on right now that has you most fired up?
Yeah, a couple things. We just launched our National Diversified Fund 7. We're seeing some really cool opportunities come into the pipeline. So I'm very excited about that. Just continuing to offer investors alternative investments, and outside what they're used to, or what they've seen in the past. So to see these opportunities come into the pipeline in today's market, and to be on the side of it where we've got capital to deploy with sponsors with a great track record, it's really exciting to be aligned with them in this market where these opportunities are coming in. And then outside that, I've got 2 business partners. Trinity Peak Partners is the name of our company. We're really maybe starting right now and looking to scale. We're working on some out-of-state fix and flips right now. We're looking to do some in Colorado. We're building the foundation and the relationships here so that we can scale and do that here in our home state. And so those 2 things is what is really firing me up right now. And I can start to feel some momentum picking up on both ends.
I love it. Have you read the Compound Effect?
I have not, no. Another book
man.
to read, apparently.
Oh man, this book is so good. Well, you probably don't do a lot of sales prospecting like you used to back in the day, right? You're probably more relationship building.
Yeah, it's definitely more relationship building. Yeah, which is exactly the kind of salesperson that I am.
And that's great. I know some people say they're terrible at sales. I'm like, no, you just haven't figured out the type of salesperson you are,
Yeah. That's a really good point. Yeah, because I think a lot of times when people start out in sales, they're trying to like mold themselves to what a salesperson should be, or what are the types of things I should be doing. But once you figure out the kind of person that you are, the kind of sales personality you are, I think it makes a world's difference in how you approach the whole role.
Yeah, and every salesperson too should have some kind of a aspect of giving back, and like, how can I give more than I'm taking? There's another book called Go Giver, which I really, 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 really like, because the idea behind it is that you give more than you receive in all of your encounters, and then you just receive back. It's such a great book because it's like Rich Dad Poor Dad. In the way that it tells a story. There's like a main character who's meeting these different people who've also went down the path that he's going down. And then at the end of it, he just becomes this great business person and highly successful. And also through the process, he was networking and meeting high level people who he was going to become. And so I feel like that's our journey, and capital raising is one of the coolest things, I think, Nick, because we get to meet people who've already went down this path, who've already built relationships, built a business they can be proud of, and now they have money where they can invest passively. And so I can't tell you a single time where I've met someone who's in that position where I wasn't inspired in some way. Can you relate?
Yeah, I absolutely can relate. One additional point that I've been really kind of reflecting on more myself is I'm at an age where a lot of my friends and associates that are my age don't have hundreds of thousands of dollars or millions of dollars to invest, like a lot of folks that do invest with us right now. And it's always crazy to see like how much money is actually out there when you start having conversations with these people. And a lot of these people don't show it,
Yeah.
and then all of a sudden they're investing $2 million with you. But I'm really taking an approach with my friends and associates right now that are my age, because they have great careers, they have great jobs, and if I just hold out on this, for another 5 to 10 years, they could be some of my big investors in my own projects or with Ironton Capital. And so again, having that long-term mindset and knowing that this isn't an opportunity now, but it's going to be an opportunity in 10 years. Right.
Yeah, I love that, because you're not just seeing them, like you're explaining the logical opportunity, which I think my viewers can appreciate, right? And on LinkedIn too, like different people in YouTube everywhere, they can appreciate that. But I know, Nick, from talking to you, that you also see it of an aspect that these are your pals, right?
Yeah.
These are your buddies.
Yeah.
And even if they don't end up being rich, like they're going to be your pals, and keeping that network of people around you is actually going to help you get elevated. And I know they say elevate your network, but some of these people who help you stay kind of like who you are as a person, the person that you like, is going to help you dramatically, because now you're not, you don't run into these like midlife crises because you know who you are.
Yeah. Yeah, exactly. Yeah. I since I've begun my real estate journey, I think kind of really, it's cemented just what I know as far as who I am, and what I like to do. I know, like when I was in pharma, I was like, I need to get enough passive income so that I don't have to do this until I'm, until 39 years old. And once I hit 40, like if I can get enough passive income and just barrel as much money into investments as possible, I won't have to do pharma until I'm, past 40, hopefully.
Yeah.
Then I switched to real estate, and I'm like, I could actually just do this until I'm dead. The relationships will continue to strengthen. The network will continue to strengthen, and real estate is not going anywhere, obviously, and people love real estate. There's a lot of money to be made. There's a lot of connections to be made, and it's probably something I'll be doing until I'm 75, 80 years old, So that mindset of like, I need to get out of my W-2 by the time I'm 40 has completely shifted, where it's like, I'm going to probably do this for the rest of my life. I might entertain other aspects of real estate, but it's a good position where I'm at now, and it's something I'll probably continue to do until I'm in the ground, I guess.
Well, the crazy thing is, Nick, think about how many people are out there right now that have that same thought that you used to have. Mm-hmm. Man, if I could just make another, 30 or 40,000, if I could just save it. It's, what I think of? I think of my kids who aren't employed, right? They're 14, twin 14-year-olds and 11-year-old. And they say something like, well, I'll just save up. I don't need you to buy it. I'll just save up. And I'm like, where are you getting money? Like, where's this money coming from? Where's the flow that you're going to save? Yeah. And the reality is that's most people's situation in the world is they have an income, but they spend all their income and they have nothing left over. So it's almost the same statement. Oh, I'm just going to save,
Yeah. This is a conversation I have with a lot of folks. There's a book I really like. It's by the CEO of Bigger Pockets. It's called Set for Life. And it's about building your financial runway so that if you don't like your job and you do want to do a career pivot, or you want to go travel for 6 months, or you get laid off, you need to have a financial runway to carry you throughout that time where you can make that decision, or you can make those changes in your life stress-free for the most part. A lot of people, like you said, they get their W-2 income and they spend it, and then they get a raise and then they spend it, and then they get laid off, and they're trying to quickly find their way back into another pharma job, for example, just, to relate to my experience a little bit. I really focused on building that financial runway. In the world of pharmaceutical sales, layoffs can happen right around the corner. It happens. You see people that are, they're with 10 pharma companies in their 20-year career. So the layoffs happen. And what's going to happen if you do get laid off? And if you don't like being in pharma, can you take that leap and expect to maybe not make anything for 6 months to a year? And that's where that financial runway becomes important. And that's what I really tried to kind of forecast 2 years ahead of time. I kind of said, there's probably going to be a day where I'm going to get laid off from pharmaceutical sales, whatever my job was, and I'm going to make that pivot into real estate. Will I be financially secure enough to give myself 6 months to a year of possibly not making any money to make that leap? And that's kind of like a conversation I have with people who reach out to me, who ask, like, how'd you make that leap? What advice do you have for me? That's usually something I always lean on, and I think that's so important.
I love it. And, on my channel, that's one of the things, because at first I was going to make my YouTube channel all about real estate, because I love real estate. And I think that everyone should look at real estate first when they want to build their wealth. But before you can really start doing that, is you have to create cash flow. You have to have a monthly income from somewhere. And house hacking, sure, you created cash flow by house hacking, right? In that case, you didn't have rent, right? So, but you do that a couple times, and now you got some cash flow. And now you're able to go into a nicer neighborhood with a nicer house, and you're able to attract a woman who wanted to live in the nice house with you because you weren't a brokey, right? Yeah. So that's I think the thing is, like, figuring out how to create enough cash flow. I say it starts at 10,000. You need to make a minimum of $10,000 a month. If you have other assets and wealth, and you're putting all this money back into those assets, and you're broke, that's fine, because those assets are going to be producing income for you as long as you can pay the bill. There's a guy, Russell Brunson. He's a big marketing guy. And he talks about his wife. He's a lot like me in that we'll create a new business and just throw all the money into it. And, like, we'll see what happens in 2 weeks. And, like, oh crap, it didn't work. And so when he first started, like, one of the things he did was he'd start like a funnel. He's the one who coined funnels, right? He created this whole ClickFunnels craze. And anyway, his wife told him, she's like, I don't care what you do to make us money, but I need this amount of money to pay all of our bills. And you can do all these crazy ideas you have. I don't want to hear about them. Just go do them. And so he figured out that was about $4,200 a month or something like that. And so he created a funnel that would started generating literally about $4,500 a month. And that gave his wife and him the security they needed to now he could just go crazy and do all these failed projects until he would hit one that would make him, like $40 million in 1 year, and then ClickFunnels hit. And now it's like, almost $1 billion company.
Yeah. And whatever that number is, you're going to need even more. I mean, inflation is, obviously we've seen record high inflation. A lot of these price increases that we've seen going out to eat or what have you, they're not coming down, so in the real estate market is so driven. Obviously it's driven on supply and demand, and it's very clear. I mean, Denver hasn't had this low of inventory since 1997. So for as long as housing is going to be that unaffordable, I just think inflation will continue to be high. And I know that whatever number I need now is not the same number per month I'm going to need in 30 years. It's going to be a lot more. And so, I'm just kind of focused on growth, and just, I don't want to say live broke, but, have just enough to get by on living expenses and making sure that I'm throwing all my money into investments. And I think if a lot of people my age or in their 30s have that same mindset, they'll be well set to have more freedom, autonomy with what they want to do with their time.
I love that.
So,
it's so powerful. Like, if you understand that you just got to go create cash flow, like, some people surprisingly are just broke
Yeah.
Nick. They're just straight up broke. And so on my channel, I talk about like different businesses you could do to start creating cash flow. And then once you have like a little bit of a nest egg, all of a sudden now you have choices. Now
Yeah.
you can, like the perfect example is in real estate when you want to get a deal, in wholesale, you want to wholesale, you want to flip something, you can cold call and spend almost nothing and just cold call Zillow for sale by owner leads and try to get some deals, and you'll get a deal if you call enough people.
Yeah.
But if you got money, now you go into PropStream or somewhere and you just send out letters. I mean, I sent out like 800 letters. It was just over $1,000. It was like 800 letters and I have tons of text messages and calls that came back that said, hey, yeah, we had probate leads. We had tons of other. So you can trade that money for time. Now you have, so it's like these laws of like gravity. And I feel like once you learn these laws that are kind of like gravity, they're financial laws and they're just business and relationship laws, we're meeting each other now. We're talking about business and what we can do. And who knows, maybe there's a time we meet at a conference or you need something or I need something. We're able to help each other. And it's this network. And so as you keep building your network, they say you build your net worth. It's true. Have you experienced that?
Oh, absolutely. I mean, I left the world of pharma. I made about a third of that in my first year in private equity, but I made that sacrifice to work with a mentor and somebody who is highly experienced and very well connected. I kind of thought if I can surround myself with him, I'm going to learn a ton.
Yeah.
It's going to give me that confidence to maybe eventually go start my own private equity company, do my own syndications, raise my capital for me as a GP, and so I'm constantly doing that. As I talk to more and more people, I'm talking to people with all kinds of millions of dollars in equity in their portfolios, or they started their own business, they exited their own business, and I'm just by way of like taking that opportunity over the financial, or taking a experience opportunity over the financial opportunity. I've surrounded myself with this network of people that has made a significant difference, in my experience. And I've already now brought my income back up to what I was in pharma by doing so. And so I completely agree. I always kind of say, connect with as many people as you can, network with as many people as you can, and just like show genuine interest in people. It'll likely lead to opportunities that you would not have been able to anticipate.
Yeah.
That's
That's
kind of
good.
my motto, I think, when it comes to like business and real estate and work. Just meet as many people as possible. You never know where it's going to go.
So one of the last questions I always love to ask, Nick, is for that person who's looking to get started in investing in some way, whether it's real estate, maybe do two different ones. Someone's just getting started investing, and then someone who hasn't invested in a fund like yours. How should those two people get started?
So the first person, it's really going to depend. Where are you at in your life right now? I'd say if you're in your 20s, and maybe you're single, or you have a partner that is on board, I would say house hack. Go, maybe if you're in a less expensive market, go buy a duplex, rent out the other side, get experience in that, and then save as much income as possible to go buy the next one, maybe every year or 2 years, and then go buy the next one. And all of a sudden in 10 years, you might have 5 properties that you can now leverage to do bigger things with, because there's going to be a lot of equity. So I always recommend is like that's the first thing. If you're not in that stage, I think passive investing is a really good option. You could really get in the know with how deals are done and how the process goes investing in properties like this. And then as far as investing in a fund, one of the things I love about the fund model, is that for ours, for example, it's diversified. So, I've talked with a lot of investors that they've invested in one syndication directly, and they were a little bit off in their judgment of that operator, and now they've lost their money. And that doesn't happen to everybody. But a good thing about being in a diversified fund such as ours is if one project doesn't pan out, you've got another one or 9 others that could lift up that one investment that didn't pan out, if that makes sense. So to kind of get a blended return in a fund, And a lot of people want that. You've got a lot of people with a nest egg. They don't want to go blow all their money on one opportunity, but if they can put it in a fund where they can preserve their wealth, they've got a good shot at continuing to preserve that wealth and pass it on to their generations. That's what I really like about the fund model. So I think that answers your question.
Yeah. I guess the idea is if you're going to invest in a fund, you want to vet the people that you're going to work with.
Yeah.
You want to look at their, have them just go to Chat GPT and say, what questions should I ask a fund manager? You'll get 100 of them. And then you can say, give me more, and it'll give you another 100, which is crazy. But we live in a different world. We live in an age of information. I feel like I grew up in an age of information. Now it's in an age of automated information, right? And we have every opportunity at our fingertips. We just have to actually take action. And so that's always my message, Nick, to my audience and to anyone who ever sees this is like, go out there and take mighty action. I say mighty. I love Tony Robbins. He says massive, which basically is just do a bunch of things and something's going to work. But I believe if you take true intentional action, which I call mighty action, and you focus on those 5 or 6 things that are going to lead to, like, put you in front of a prospect, put you in front of the people, put you in front of your mentor more than anyone else, like those things are going to be like rocket fuel in building you as an individual. And then you're going to be able to achieve whatever you want. Now just kind of wrapping things up here, we're going to close. But I want to hear what you have to say about mindset, because you mentioned in your bio that mindset was one of the things that helped you. Did you have a limiting belief at any point?
When I first started my career or my journey in real estate after house hacking, I wanted to get right into syndications. I got fired up about it. I realized that my confidence was not quite there. At the end of the day, we're stewards of people's capital, hard-earned money that they're relying on you to grow. And the market shifted, and I'm like, I don't know. My entire adulthood I've been in an inflating economy and an economy in great growth. This is a significant pivot in the market and economy. How do I operate in that? And so I'm going to kind of maybe stand back a little bit and watch how things unfold and what happens. But then I'm going to rely on people that are experienced, and I'm going to invest accordingly. But as far as mindset goes, be patient and have a long-term mind. Long-term mindset is everything. I mean, we live in such a short-term. I needed my short-term fix. This is what feels good now. This is what I'm going to do now. That's usually not the best thing long-term. So if you can just be patient with your progress and investing, especially in real estate, it's a patient game. It's not a get rich quick scheme. So if you can be patient and then just be a sponge and learn as much as possible, and don't be afraid to lean on others, and accept that opportunity, even if it's not the most lucrative opportunity initially. I think if you encompass all of those into like one mindset of just being patient and having a long-term growth mindset, like you're not going to lose, in my opinion.
That's good. That's good. How can everybody connect with you, Nick?
Yeah, so they can connect with me on LinkedIn. That's usually the best. I don't know if you're going to drop it in the notes or not, Mike, but that's usually the best way to connect with me, or through email. I'd say nick@irontoncapital.com is going to be the best way to contact me. If you want to have a conversation about your portfolio, investing with an IRA, investing in a fund, I'll answer all the questions that you have.
Awesome. Well, thank you again for coming on. You just dropped some crazy value. I know people who are looking to invest, they want to kind of hear things out. And sometimes they will think about it. When you're investing $100,000, you're going to take the time to vet people out, to listen to them, and to just see what their experience is online. That's why, I own a marketing company, so I am biased here, but everyone should have a brand and marketing online. And, we're no different. You're doing capital raising, you got to be able to be found online. And so you did a great job of that. I found you on LinkedIn right away as somebody who is a high operator who is doing big things. And so I appreciate you taking the time to be on the show.
Yeah, thanks for having me. Super excited when you reached out, and I'm excited to stay connected, Mike, for sure. So I appreciate you.
Absolutely. And stay till after we end here. I have a special gift for you.
Sweet.
All right, you guys, we'll see you on the next episode of the Mighty Mike Show. Go take mighty action. Let's see those guns, Nick. Be a good thumbnail. All right, you guys. See you next time.
See ya.
For more great content like this and your chance to win cash prizes each week live online, visit www.mightymikereed.com. That's www.mightymikereed.com. Don't forget to subscribe, rate, and review on your favorite audio platform. Until next time, take care and live mighty.